Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, July 12th, 2019, DecisionPoint show with your hosts, Carl and Aaron Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, it's just been a little bit on the warm side here lately, huh?
Yep. Going to be typical summer from now on.
It's my first one back, so I'm hoping the air conditioning won't have to run constant. It's already my electric bill's starting to show it, though, I have to say. All right, well, we got lots to cover. We're going to be looking at the broad market indexes, of course. I have a price relative chart to let you see. We'll be looking at a weekly review of those scoreboard indexes. DP indicators, I'm going to cover the short, intermediate term, and our ultra short term indicators. Then I'm going to demonstrate the DecisionPoint Intraday ChartPack. It is free, and I think you'll find it quite useful. And then the Big Four, Carl's going to be covering that. And then as a bonus, Carl's got his grab bag today. So it should be interesting to see what charts you have for us. I haven't even seen them yet, guys, so I'm looking forward to it. All right, let's go ahead and get started. Here are those DecisionPoint scoreboards. We really haven't seen any change on them since June, near the end of June. And at this point, we're just waiting for those long-term PMO sell signals to go away. The long-term PMO is the long-term PMO signals are generated from the monthly charts. And right now, the monthly charts are showing that PMO is turning up, but it still has not reached its signal line. Oh, that was interesting. All right, so we're still waiting on that one. But of course, as far as our trend models go, we're set up perfectly with those EMAs. As far as the sector scoreboard goes, we're all green, green for go, except for that sell signal, the long-term trend model sell signal on XLE. And that would go away once that 50-day EMA crosses above the 200-day EMA. So we are still waiting on that signal. All right, let's go look at some stock charts. I have quite a few to review with you, as does Carl, so let's go ahead and get it started. All right. What I am looking at right here, what you're looking at right here, is the price relative chart for all of the major indexes to the S&P 500. Of interest, I suppose, would be that we're seeing an upturn right now in the Dow Industrials. Of course, they certainly had a great day today, which isn't surprising to see this bump to the upside against the S&P 500. Large caps pretty much in line. You've got NASDAQ 100 still trending slightly higher, but really when I look at this picture, I do see flat, meaning that they're all pretty much performing at about the same rate. You've got the S&P 400, and if you look in the thumbnail, it's at a lower relative low for the year, and still seeing some decline there. And as far as the S&P 600, still in decline, but I guess there's sort of a little hope sitting out there in that we have formed a new, a higher relative low. So maybe we'll see a bounce off of that. We keep waiting for the small and mid caps to really start to participate here in outperformance anyway, or at least performing in similar fashion to the S&P 500, but we're just not seeing that yet. All right, let's look at the price charts for the broad market indexes. And really what I want to point out here, mostly on this chart, I've put up these I guess you could call them resistance lines. Not so for, of course, some of these indexes, but I've put them at the highest high that we've seen in this past 2-year, 3-year period that is on this chart. So at this time, the equal weight RSP is making higher highs than we saw back here in April and May. IJH, our S&P 400, the highs came in last summer, and we're still trying to get up there and test those, have not done that, still showing some margin here between that resistance level and where price is. But if you really want to see one that's hurting, that would be the S&P 600. Like I said, we keep focusing on that, keep looking for some really good price movement out of it. But as you can see, its highest highs were back in August of last year. And look at the margin between those higher highs and the current price highs. It'll be interesting to see if we can break out. If you look here in the thumbnail, you can see that it has broken in the very short term above a declining tops trend line, but overall looks like sideways action. As for the 400, the same. But notice the Dow, like I said, we're starting to see some outperformance there on the Dow, and NASDAQ 100 is still looking pretty good there. We have managed to get over the highest highs it had, which were the April, May. Those were the all-time highs, and now we're setting new ones. All right.
Small cap index is 14% below its all-time high.
Oh, there you go. You have the measurement. I could probably put that in. I should do that. Let's look at the global markets. We're going to be comparing the global ETFs just for the sake of being consistent, but you should be aware of that currency exchange and how that can affect the movement. Sorry about that. So looking at this, again, I marked these highs, the highest highs, those all-time highs for each of these ETFs, so that you could see whether we're getting the margin closing. Are we getting ready to hit the resistance level there? And at this point, we're looking at Canada getting ready to challenge those highs, but look at the Germany ETF. Huge disparity from the all-time highs in January of 2018. And when you look at France, starting to see some improvement as far as the declining tops trend line, but also below its all-time high. We have EU still in that declining tops trend, and we can see also that Japan similar, India and China have not really broken out of their declining trend, coming in off of their all-time highs in January of 2018. All right, let's look quickly at these scoreboard indexes. As you can see, great movement on the Dow. It broke out yesterday and it continued its move higher with a rise of nearly 1%. It's at 0.9% rise. Look at the PMO. It had started to turn over there, which had me a little bit concerned since we were in a rising trend. However, it immediately has turned around on these two breakout moves, thinking that looks pretty good. You can see volume has been, it's been all right. It's still below its 200-day EMA. Would like to see a little bit more pop there on a move that would set a new all-time high, but we didn't quite get there. We're seeing the OBV rising bottoms in conjunction with rising bottoms there on this move. I guess the only thing, if you wanted to worry about something on the chart, I would just say that looks like we've formed a lower high on the OBV, and you probably wouldn't want to see that when you're coming on a breakout move to the upside. All right, weekly chart, and then we'll skip on into the OEX. Another good look of the week, up over 1.5%, and we do have that buy signal intact. We have the NASDAQ 100 chart for you to look at right here. And you can see it has been setting new all-time highs as well. PMO on that buy signal, and actually we're not that overbought here. So I think that we could certainly see price sustain this move to the upside. Weekly chart, here we go. And there you are. You can see this week is when we got that nice breakout. The NASDAQ 100 was up over 1.3% this week. And we have that PMO bottom above the signal line, and certainly not what I would call overbought. So again, I think we can certainly accommodate more upside at this point. OEX, pretty similar to the others we just looked at. Nice movement on the OBV here though. Weekly chart for the OEX, we had a not quite as big a move to the upside on the OEX as we did on the Dow and on the NASDAQ 100. Looking at the S&P 500, we do have a nice rising PMO. It is getting a little bit to that overbought side. And you are seeing, but you're still seeing a pretty nice movement here out of the OBV, higher highs, higher tops, matching those higher price tops, supporting this move. It was a move to 0.46% on the day. And then when we look at the weekly chart for the week, not quite as great a week as we saw in the Dow and on the NASDAQ 100, which I find interesting. We have a PMO bottom above that signal line. I think that's good. All right, let's quickly look at some indicators, and I'm going to pop into that intraday chart pack and just show you what it's looking like. Now, we didn't have our readings, so I'm going to go ahead and annotate these in. This is looking fairly climactic today, and we're coming in. We didn't quite puncture that upper Bollinger Band, and I think we could see higher readings here. I'm not going to really, I personally wouldn't read this as a major climax here. I think it's just going in line with the rally we're getting. I'm going to be watching to see if that VIX does get up there and penetrate that upper Bollinger Band, but it hasn't yet. And I think while these are high readings, I wouldn't look at them as particularly climactic. And feel free to chime in, Dad, if yes. The short-term indicators, the Swenland trading oscillators, what I've highlighted here is just we really want to see that oscillation above the zero line. That's when we know we have some internal strength. We were fading here on the STOs, but look, we have now popped right back up above, just above the zero line. So I think they look quite healthy. Intermediate term indicators, the ITBM and ITVM, they had turned down. I don't usually get too concerned about that until we actually get a negative crossover. And that really did not happen the last time, and we were still pretty far from that happening this time, and now we've actually turned back up, and there's still certainly room to the upside for these to accommodate more rally to the upside.
They are pretty, they're getting overbought.
Yes, I would say
relative to earlier this year, they're still down there, but if you look at the range across the 3 years, you got up there 4.
Mm-hmm. Yep. So something to watch out for. All right, now I'm going to just skip right on in. We have all of these free chart packs that are out there. And the one that I really wanted to show you, you can get to your chart packs very easily. You just go to your account, go into Manage Chart Packs, and if you are an extra member or above, all of our DecisionPoint chart packs are free. If you get them and then you're not really happy with having that many chart lists or charts, you can always remove them. But I bet if you add them, you're going to want to keep them. So the one I'm going to highlight today are the DP intraday charts. And the beautiful thing about this chart list is I really find it the best to look at it in a chart book format where you can just click right on through. And that is the best way to view. You get all of these 10-minute bar charts of all of these, and you can click right through and make some comparisons as to what happened in the major indexes. And as you can see, good day, most everything is up. We're looking, there's the OEX. We have the Russell 2000, and again, nice move to the upside here for the Russell today, up over 0.75%.
Wait a minute, go back to the Russell. Go back to the Russell.
Sure.
Yeah. I'm showing a down. Oh, okay, yeah, all right, I'm looking at the end of the day.
Yes.
Okay, I got to orient myself here.
Yes, these are all 10-minute bar charts for intraday viewing. These are great really during the day, more so than at the close even. So, but you can just click right on through and get a feel for what everything has done. You can see treasury yields were lower. The 5-year US treasuries were lower. The yields. And we also go in and you can look at some of the major indexes. Here's the airline index, biotech, broker dealer. So it just goes on and on. But a great way to pay attention and watch during the day is to get the DecisionPoint intraday chart pack. And as I said, you do need to be an extra member or above, but to save the time that you may not be able to save right now, I think it's an excellent addition to all of your chart lists. So I'm going to pass it over to you, Dad, for the big four.
Basically, I've been confounded with the movement here. We had a head and shoulders pattern. It broke down, giving us sell signal, and it immediately reversed. Then we had a breakout above the declining tops, and then that reversed. We had the rising trend line, bottom of a rising wedge, broke down from that, reversed back up. So I think basically what we have here is about 3 months worth of ragged consolidation. And to make more sense of it, let's go to the weekly chart. So there we have it. We got the overhead resistance there we ran up against, and looking at the PMO, we're probably going to head lower from this level. Gold, basically what I'm seeing here is a flag formation. It's been consolidating for about 3 weeks now. Very, very healthy. We've got a PMO sell signal here, but really it's moving slowly down and to the side. It's not any downside acceleration on the PMO, which of course shouldn't be because of the sideways action of price. But I like that to look at this chart for sure. Correlation is a very strong negative correlation with the dollar. Weekly chart, you see the long-term line of resistance, which is now support. I don't normally, I had a healthy looking PMO, and I don't normally look at the monthly chart because it's not the end of the month, but to illustrate what's going on here, we have a saucer, and it's starting to put a handle on the saucer. So that's a positive move. Crude oil, was kind of stalling out last week, but this week it broke up and it basically closed this gap this week. Don't know if that's going to be significant or if it's going to turn down again. Answer might be on the weekly chart. What I'm seeing here is crude oil in a consolidation pattern between 76 and 42, right dead center right now. So it definitely can go higher, but I don't think it's going to go out of this trading range. Like I say, maybe some more upside pressure, but I don't think the supply on crude is just too fantastic right now. So I don't think we're going to see much higher prices. We're not going to see like the good old days back here. Okay, bonds. They were kind of stalling last week, and this week broke down. We have a rising tops line, which kind of caught on, but in honor of Greg Morris, I looked across and I see a nice horizontal support line also coinciding there. The PMO is heading down right now pretty well, and I'm going to assume that the bond prices are going lower. I'm not sure how that works when you've got an interest rate cut possibly later this month. That'll be the 31st, actually, was when the Fed will be talking to us. The weekly chart, weekly PMO topped, which is a negative signal. You can see the long-term resistance line is what stopped it. As I pointed out last week, the 20-year bond yield can go much lower, so that would leave room for the price of bonds to go higher. But right now, it's looking down. Always like to look at the yield array chart.
It's always so pretty.
Yes. And you notice, let's see, it hasn't updated yet for today, but you notice that it is basically curling back up, and the 10-year is getting very close to the 1 month and the 3 month. But right now we still definitely have an inversion. Wanted to comment on the VIX. You know, it's funny. Many years I really didn't get the VIX until I flipped it over and put it on a log scale. And it's starting. Within the last year, it's starting to make sense to me. There are a lot of things that we have out there, a lot of indicators that I don't know anything about. It's just, I said to Tom Bowley once that I had, I knew everything I wanted to know about this stuff, because after a while you get tired of looking for the pot of gold or the perfect indicator. But because I discovered one, where the heck is it, if I can find it? I guess I'm not going to find it here. But it was a Ichimoku or some kind of.
Oh, the cloud, Ichimoku cloud. That's an overlay.
I just discovered that this month, actually. But it's one of those things that, okay, I try to read it, try to understand it, but first pass, I don't. Maybe these days somebody will show me what.
Well, I wish I could, but it's not one of mine either. I learned it for the CMTs and promptly flushed it out of my brain.
So anyway, right here we have the first puncture and punctured again, and each one of these, you see there was a little bit of a pullback, and it didn't actually puncture yesterday. It got, I would say, you could almost say it touched, but if you look on a thumbnail chart, you'll see there's about a half a pixel between the top Bollinger Band and that. But to me, I'm counting it as a touch, and so I'm looking for another little pullback here, short term, pretty quickly. Next week we have options expiration. It's not an end of quarter, so and typically that's where we get the big high volume. So I expect a normal volume, but also towards the end of the week, normally we get very low volatility towards the options expiration. Okay, before I don't have enough time, I want to get to the chart that I had prepared especially for today. Looking at Amazon, parabolic move, a breakdown, and now it's recovering. I don't know if we're on to, like here we had a parabolic breakdown and then it continued on. So we may be in that situation. Look back here. It was a 95% decline during the bear market of 2000, 2002. And here was a 66% decline. Now, this company was a lot different company than it is today.
That's for sure.
But still, we got a pullback of 36% off of this parabolic break. And it's just something to keep aware of. I'm going to expect it to go higher, but right now it's the worst it could get. It would seem to be a double top and then start down, but not actually looking for that necessarily. Okay, getting to the here's our percent of IT trend model buy signals, S&P 500. It's well, they haven't posted today's, but it is higher. It's another tick, about a point higher, and so we're lower now than we were here. Not real concerned about that, but it's certainly, if it rolls over heavy, this trend line, if you drew a trend line under here, once that trend line breaks, then I would be concerned. Here is the golden cross percent index for the S&P 500. And it's not as healthy as it was back towards the top. And here's another one I like to take a look at, is similar to what the chart we just saw, but here I'm looking at these. These are the bullish percent indexes. Bullish percent is percent of stocks on
Point and figure buys.
Yeah, point and signature. See, point and signature.
Point and figure.
Point and figure buy signals, right? Anyway, notice that it's quite a bit lower on all three major indexes, so that should be of concern. And then, what the heck, Bitcoin. Here it is. I don't know. Maybe this is going to be a double top here.
Sure looks like it.
Yeah, it sure does.
Oh, and then the PMO has got a sell signal today, huh?
Oh, yeah, it did.
Yeah.
I'm not sure what the OBV is worth on this. So that's my...
Excellent. We're doing good here, and we got to go. See you next week.
All right.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Chicago, July 21st through 23rd, dozens of the most respected traders in the world, including Rick Santelli, John Najarian, Tom Sosnoff, Linda Raschke, and Ralph Acampora, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, commodities, forex, futures, and cryptocurrencies. Claim your free pass to join them at ChicagoTradersExpo.com.